From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for February 15th, 2017. In just a moment, we'll be taking a look at the USDCAD, the US dollar versus the Canadian dollar. But first, I just want to recap a couple of the trades that we've made over the past couple of weeks. If you look at the bottom of my chart, you see three trades going. The NZD-USD, which is actually a trade that we took last week, still holding our last and final lot here, trying to capture as much profit as possible. We saw nearly 200 pips of profit on that trade yesterday, but we've locked in with the stop loss. Can't lose. Just waiting to see if we'll get another surge lower for the New Zealand dollar. GBP-USD, the pound dollar trade that you see there, 25.20 was the short that we took. We've seen over 100 pips of profit on that trade as well, so I hope that you are capturing and locking in profit as we go. Dollar yen was our trade from yesterday. 113.40 was the long position, sitting over 100 pips of profit now. So again, it would be my expectation that you are protecting profit, locking in with your stop loss, closing profit as we go along on the dollar yen. So it's been a good week of trading. The GBP USD, the USD JPY are two trades from this week. NZD was from last week, but it's been a good week of trading. So I don't want to put too much of that in jeopardy until we're confident with some trading opportunities, but I think there's some things to watch here on the dollar CAD today. First off, if you look here on the daily time frame, we're in a downtrend, or we're within the downtrend. We talk about the red trend line here where we have been going down for quite some time. Since basically December, we've been moving lower along that red trend line. We've seen a couple of ups and downs. We see the rise here, and then the fall, then the rise and the fall. So we've seen some ups and downs. The pink and blue shaded areas down towards the bottom of the chart, we'll call the pink zone 1.3055, 1.3035 is the pink shaded area where we're currently finding support. Blue zone's all the way down into the mid to upper 129s, 129.85, 60. Red trend bar Forex Black Book also shows us a bearish bias. So we're congesting, we're consolidating, we're maybe even contracting here a little bit inside this area between the pink as support and the yellow shaded area where the trend line is as resistance. Now, over today, we have some significant news today that could change everything here for the USCAD. Coming up at 8:30 a.m., we have manufacturing sales out of Canada first. So that could be interesting to see if that has any role to play. Maybe more significant is USD out of the US. We have CPI and retail sales data, so we'll definitely want to watch that. All that coming up in about 35 minutes from the recording in this video. Something else to watch, which we saw yesterday, was a big mover. Fed Chair Yellen is scheduled again at 10 a.m. today. So if it's a dollar's positive surge, now, of course, that would send this currency pair higher, but we didn't see a big move higher yesterday on this currency pair with that dollar surge that we had. And then at 10:30 a.m. we have crude oil inventories, which of course we know that oil prices fluctuating up and down can have a significant impact on the Canadian dollar and could cause this currency pair to move. So we have a lot of things to watch today. So we want to keep an eye on it, looking for low risk and high reward opportunities. If we're going to trade the trend, which is, I believe, still the red trend line, then we may look for opportunities to go short into resistance or a breakdown of support. If we're going to look for opposite direction, if any of that comes out positive for Canada, negative for the US, we could be looking for this to go down. If it comes out negative for Canada and positive for the US, we look for this to turn around and likely start moving back higher again. Let's go ahead and zoom it in one time here on the USDCAD on the daily time frame. Let me squeeze it out like this, and we can see even the short term, 1, 2, 3, 4, 5, 6 days, 7 days, have been going lower along this black trend line. And really 1, 2, 3 days stuck between the yellow and the pink zone. Again, we've already seen some support down here into the pink shaded area before. We know it's the potential to find support down there, so we need to be aware of that. If it's going to go lower, it would definitely need to break down through the 1.3030 or so level. Right now, that's holding as support. If we're going to go short and we look to sell rallies to resistance, we look for it to be back here towards the yellow shaded area to provide us with lower risk and higher reward. Now, if you're a buyer, if you're thinking maybe it's time for this to turn around and go back up, maybe we get some positive news for the US, maybe some negative news for the Canadian dollar, We look for this to break through those two trend lines, the black and the red, and start moving its way back higher. And that, of course, I think would be against the bias for the trend bias for the Forex Black Book. Let's take it down to the 4-hour time frame. And again, you can see the last time we got under the pink zone over here, it went all the way down to the blue shaded area. So that's something that we need to watch for over time. If it gets under the pink zone, we look for it to go back down to the blue zone. Sitting on top of it obviously has found some support, resistance clearly right here, and even in the most recent hours finding resistance there into the yellow shaded area. So if you're looking for an opportunity to go short, I think we need it to get as close as possible, maybe inside even this yellow zone, to reduce our risk. That would imply that if we're going to go short and reduce our risk, your stop loss would be above it. Let me change the color of that line so it's different than the other two lines that are there. Let's make it just a this blue color. So if your stop loss is above the yellow zone and you look to go short, you want to get as close as possible to that. Maybe a little bit of, and here at 8:30 and about 30 minutes from the recording this video, maybe we get a little bit of a negative push on CPI or retail sales that sends it running into that yellow shaded area. Maybe we get a little bit of a push back into the yellow zone. Really, that's all I'm saying. A push back into the yellow zone. We look for it to go back down towards the pink zone and breaking through the pink zone back down towards the blue zone. If we get a significantly positive move for the dollar, again, we could be looking for it to go higher. Watching oil at 10:30 a.m. as well, the inventories could give us a clue for direction. So at least at the current moment, if you're a seller, the yellow zone will provide lower risk and higher reward to go back to the pink or the blue zone. If you're a buyer, you probably want to wait for it to get as close as possible to the pink shaded area to improve your risk reward, because right now your risk is a breakdown underneath there. So your stop loss is underneath the pink zone. So at least right now, you see these two blue lines, we're about halfway between them. Improving your risk reward means you need to go up to the yellow zone or down to the pink zone, no matter which direction you're going to trade the USCAD today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.